But today's top focus is on an issue that should concern each and every Indian, the economic challenge that the country is facing at the moment. At a time when the war in Ukraine shows no signs of ending, when inflation is spiraling across the world, the rupee in this country is sliding against the dollar. It's reached its lowest level and is about to touch 80 rupees to the dollar. Remember, on 28th of April, it was about rupees 76.47 paise. It went up to 76.54 by the 6th of May, went up to 77.42 on the 12th of May. By the 26th, it had reached 77.60. June 13th, another new high, 78.13. July 4th, just 3 days ago, 79.40. It's come down marginally after RBI intervention to 78.99. That's not all. Inflation also is, remember, also the other big challenge, not just in India, but across the world. Retail inflation, as you can see in those figures, remains, which was at 4.48% in October, has been steadily rising. The Ukraine war, the ballooning oil pool deficit has added to our woes. Consumer inflation touching an 8-year high in April at 7.79%. In May, dipped slightly to 7.04%, but remains above the danger mark. So clearly, falling rupee, rising inflation is our top focus. So what does the weakening of the Indian rupee mean? What are the solutions? Joining us now, very special guest. We're joined by the former Reserve Bank of India Governor, Mr. D. Subbarao. Remember, it was when Mr. Subbarao was in the RBI chair about a decade ago that the rupee again had plunged. Now it's plunged even further. I appreciate you joining us here, Mr. Subbarao. The Indian currency weakening nearly 6% this year, putting it on the threshold of 80 rupees per dollar for the first time. Trade deficit has risen to 25.6 billion in June 2022, 62% higher than June 2021. How badly do you believe the Indian economy is affected at the moment, especially with the external factors, what's happening in Ukraine and in global inflationary pressures?
Well, the Indian economy is certainly going through a difficult phase like every other economy in the world. You referred to the external situation, the fall in the rupee about 5 to 6% over the last 1 year. The fall has been particularly steep over the last 2 months. And that's happened because of two reasons: capital outflow and current account deficit. Why is foreign money leaving India? Throw your mind back to 2 years ago when the pandemic broke out. Every major economy in the world, including the US, Europe, India, unleashed an enormous amount of liquidity into the system. That money, unleashed by rich countries, was looking for a return, and it came to emerging economies like India and other countries. Now, as the US and Europe are raising interest rates because of inflation at home, that money is going back, putting downward pressure on the rupee. The other reason, of course, is current account deficit, which has risen, as you pointed out yourself, because of higher cost of imports. As an economy, we import more goods and services than we export. In other words, we spend more than we earn. When that makes the demand for dollars much higher than supply, and that puts a downward pressure on the rupee. So for both these reasons, capital outflow and the rising current account deficit, the rupee has weakened against the dollar. But you must also note that the rupee has strengthened against other currencies, other hard currencies like the euro and the yen. And the RBI looks at what they call the real effective exchange rate, which is the exchange rate of the rupee vis-a-vis the currencies of 40 trading partners. And that's slightly overvalued. So I don't think it's difficult. It's difficult, of course, but I don't think it's an alarming situation on the external front.